Welcome to Forex School Uganda. I'm Godfrey. Today I want us to do a top-down analysis on gold to see where price is at right now and where we anticipate it to get to. If you're new to the channel, kindly subscribe, like and share the video. Now from the time, this is the monthly time frame, and from the time that price broke out of this resistance area, it's been trending heavily to the upside, but we see these long rejection wicks currently forming on the upside, and this could be a bit of a problem in the coming days. However, when you look at the sizes of the candles, this was a very strong momentum candle. This was also strong as well, pushed to the upside, but was heavily rejected back, and it closed down here. The next one tried to push up to the upside, reached here, but was heavily rejected to a point of it closing down here. Now this was even much smaller. However, we see that the current candle that is forming seems to be having a little more momentum than the previous candle. We see it has so far currently broken above the high of the previous candle. If I could just bring this line here and I zoom in a little bit, you will notice that the current candle was able to break above this high of the previous candle. Now spelling to us bullish volume coming into the market, but there's nothing conclusive here, and so we have to get more details from the lower time frames. So dropping down to the weekly, we see that price has been ranging between these lows and highs. Price previously had formed a minor resistance area here, but it was able to break and close above it with this bullish close, and now the next bullish candle was able to move with huge momentum to the upside. However, it wasn't able to touch this resistance area here above, and so there's still some little room to this resistance area. Now the current candle opened from up here, dropped down to the downside, reached this area. It had moved down to retest this broken resistance, now turned support, however minor it was, and so we see it being rejected, and currently it is still running. Today is Wednesday, so it still has 2.5 days to close, but we see it being rejected to the upside, and hopefully it is entirely rejected, flips around bullish and comes to retest this resistance up here. Now dropping down further to the daily time frame, so we can pick out more details as far as this price formation and the structural formation of the market is. Looking at this daily time frame, we see there was an area of resistance formed here, which price was able to break and close above. The next candle came in with a huge volume to drop to this resistance, now turn support area, and it was able to be the structure was able to reject it, and much as it closed bearish, it never closed below. We see it just left a wick below it, signifying rejection of lower prices. And now we saw the next candlestick come in, and it created a bottom wick, tried to drop down below support, but was rejected, and it closed above support. Not only did it close above, but it was able to close bullish, meaning that the bearish volume had died down, the bullish momentum was coming in, and now the bulls were in charge of the market. So now what we see is that currently price has broken above the high. It is currently breaking above the high of the previous bullish close, and we can only expect price to come and retest these highs here and potentially come into this weekly resistance area. So that's our anticipation. And in the breaking of this, our anticipation is that price is likely to continue to come and retest this high here and potentially this high on the upside. If we take our Fibonacci tool and measure from the low or the beginning of this impulsive move to the upside, we see that price dropped and was rejected at the 50% retracement area. Now, that completed what we know as the impulse and correction phases in the market, and now we are at the beginning of the next move in the market to complete the impulse, correction, and impulse move in the market. Once we have this third leg completed, we will have the impulse, correction, impulsive move completed in the market. Now, dropping down to the lower time frame, the 4-hour time frame, to show you how positions are taken in the lower time frames, specifically the 4-hour. The entry area after price having this correction to the downside, first of all, we saw it create a minor rejection area here. Then it created a second one here after being rejected from this area strongly to the downside, which was yesterday, courtesy of the news that was coming out during the interviewing of the Federal Reserve Chairman in the US, that's Powell. We saw it create this resistance area here, and then price was able to break and close above it. Now, having closed above it, like we had said, we are anticipating that price will get to at least this high here, but ultimately the targets might have to be this weekly resistance area, the top of the range of both the weekly and the daily time frames. So the entry area on this 4-hour time frame was once price broke and closed above this resistance area with this bullish candle, we were to wait on the retest of this area, and the best position was a limit entry with a buy limit taken at the retest of the broken resistance area, now turn support, and the target was at the -27 area of the Fibonacci extension, taking the Fibonacci tool from the low of the correction to the beginning of the correction. What I'm talking about is that the correction started from this high here and stopped at this low here. So we are measuring from the low of the correction to the high of the correction for us to be able to know where to set our stop losses and where to put our targets as far as this particular trade is concerned. And so the target is at the -27 area. We are targeting a 3-to-1 risk reward. And so we are looking at our stop loss being below a structural level. And this is what we see here, a place where price was able to make a turn from a low trending market to a bullish market during a minor retracement phase. And so that will be around the 78.6 retracement level. But then we put it a little lower to leave room for any wild swings. And so that is the position that is currently running on gold. And we anticipate that price will get to this -27 area for a 3-to-1 risk reward ratio on this particular position in the market. Now, when we look at the COT data on gold, we see that the previous figure was 284,000 positions, long positions in the market. They came a bit lower to 280,000 positions. The sell positions were more or less the same without the figures changing at all. we see there are 4,000 positions closed in the week compared to 82 positions closed in the week. But remember, that was during the retracement phase in the market. And so the fact that price was still retracing, that retracement was brought about by the closure of these 4,000 positions. But when you look at the net interest, the previous net interest positions were 452,000 and the current net position is 454,000, which is a positive variance of 2,000 positions that the big boys have increased in the market. So overall, we see that the net positions, the net interest in the commodity of gold is growing, notwithstanding the fact that the long positions reduced by a figure of 4,000 positions. Now, like I've explained, this reduction in the net positions as far as longs are concerned was because the big boys were coming into the market, dropping price to be able to grab liquidity on the downside before they could take their long positions, and that has already happened. But we see that the open interest is overall increasing, meaning that they are more interested in the gold commodity. They're gaining more interest in this commodity of gold, and that would only speak of bullish buyers developing in the market with the big boys. The fact that they are interested in this commodity, taking more long positions because the retracement is done, so we do not expect more negative change as far as the long positions are concerned. Now, this is not trading advice, it's just my perspective of the market, and this is just educational content. But by the look of things, as this position is currently running very well, we expect price to reach this high at 27 retracement area, with price completing the impulse correction and impulse move in the market. So the current position is currently running green, and once it gets to this area, that will be a very clean 3-to-1 risk reward gained on this position in the market. So that's my take on gold. And if you're new to the channel, once again, kindly subscribe, like and share the video, and keep yourself tuned to the channel for more educational content that I will be throwing here on the channel every once in a while. I will see you again.